All right, as 2025 moves along, Nigeria's investment outlook offers both opportunities and challenges driven by macroeconomic trends and ongoing reforms. Key sectors like energy, technology, agriculture, and finance remain attractive, while inflation, regulatory changes, and political stability are crucial factors to watch. Well, joining us for this conversation, we have Mr. Egie Akpata, who's the chairman, Skymark Partners. Great to have you on the show. Happy New Year. Okay, you might have to unmute. I see your mouth moving, but I couldn't hear you.
Happy New Year, Ladi.
Fantastic.
Thank you for having me on the show.
It's great to have you. So, what are the expected trends in, Nigeria's stock market that you're seeing, your crystal ball is showing you for 2025?
Well, I think whatever predictions people might have had last week might have changed given the activity you see in the insurance space. A lot of insurance companies are up 30% already this year, so that's very unusual. But again, that might be a sector worth looking at. But I think by and large, banks are still where the action is, simply because of their relatively low price to earnings ratios and their high dividend yields. So banks that have high earnings growth and a high dividend growth are definitely a safe place to be. But overall, I think there's always somewhat a price discrepancy in this market, where low price stocks tend to do better than high price stocks half of the time. And we're seeing that with insurance, and that might apply to a couple of other sectors.
And you're talking about that insurance sector now. What would you say is the best strategy, to pick the winners? Because we have that recapitalization coming up for the insurance industry. We're going to have mergers, maybe acquisitions. So what are you seeing there? What would you say is the best strategy to pick the winners?
Well, I think it's a very tricky sector to try and play this in. I mean, we've seen this happen maybe a long while ago, maybe 2008, shows a lot of promise, and then, some people might be left holding the bag. So you have to be careful. There's some of those companies that are somewhat distressed, that might have low prices, but might not have good liquidity if you have to get out. So you want to focus on the better capitalized, better run, more liquid stocks, which tend to be higher priced in terms of absolute Naira priced, and so potentially might not give you the very, very high returns you see of those 1 Naira stocks, or those even below Naira. So you need to still focus on quality and liquidity.
So I guess at this point, you shouldn't marry any one stock in that sector. You have to be careful.
Yes, I mean, again, you sometimes have to have exit prices. So when you get to a certain price, even if the momentum is still there, you need to use that momentum to get out, because some of these stocks will have liquidity issues. And that's a common problem across the entire market, depending on how much you're investing. You always have to be cognizant of how you're going to exit, and if there will be liquidity in the market to take you out when you want to do that.
All right, talk to me about sectors that are likely to drive growth in the capital market. Is it the same, the expected culprits, financial services?
Well, it'll vary. I mean, banks are always a good place to start. You might not get some of the very outrageous returns you see in some other sectors, particularly with the bigger banks. But you will get safety, you will get liquidity, you will get dividend yield. If you want to be a bit more excited, a bit more adventurous, then you can look at some other sectors like insurance we've spoken about. There could be some interesting activity in the FMCG space. Bear in mind that we had several years of depressed prices, and at this time, some of these prices are starting to go back towards their historical averages. A lot will change if foreign investors come back into the market. They've been more or less absent for a while, and the kind of stocks that foreign investors like are probably a place to target. So the high quality FMCG names are probably worth looking at right now.
Right. And I want to cast our mind back to COVID. Remember, that was the time we saw oil go negative. That's oil prices. We saw a lot of risk assets, fall like hot potatoes. And now we're getting reports of a respiratory infection. That's a pneumovirus, HMPV. Are investors and advisors getting nervous, with these reports we're getting about this new strain?
I'm not sure that you're going to get the same kind of effect as before. I mean, so yes, you have all kind of outbreaks Normally in this time of the year, if you look at the US, this is their flu season. You have all kind of outbreaks of variants of viruses coming out. You're not going to get that kind of 2020 effect anymore. So I wouldn't really use it as a benchmark for making any kind of decisions from an investing point of view. Not a factor right now.
But if we're to imagine that, another pandemic is upon us, are we exiting all risk assets?
No, quite the opposite. I think that even if you had a pandemic today, the way it's going to be handled is going to be quite different from 2020. And so you just have to bear that in mind. And I don't think you will get that drop-off in risk asset prices anymore. It's kind of like once bitten, twice shy. You're not going to get investors dumping quality assets because of a temporary problem.
All right, we'll definitely keep our eyes on this one. But, looking at, the space, the investment space here in Nigeria, what would you say is that asset class that investors should really, really be looking at, in 2025? Are you seeing cryptocurrency, Bitcoin, as something investors should be looking at, at this time?
Well, I think in terms of, we've had this discussion before a few weeks ago. I still think that because you have very high interest rates in Nigeria right now, your 1-year T-bill is at almost 30%, at least in the primary market. It's hard to see the currency, falling, fast enough to justify staying outside a Naira risk-free. So I think the best investment right now is probably a 1-year Treasury bill at about 29.7%. The question is how long it will be available at those kind of levels. We've not had an auction this year, so we don't know. But I suspect that you'll be getting those very high 20s throughout Q1, and I think it'll be a good idea to accumulate those securities for now, because it's unlikely you'll see those level of yields in the second half of the year.
And, looking at, the currency space, we've been seeing stability, with the Naira. We did hear the central bank governor said the Naira has been stable since about June, July, of 2024. And it seems we're still seeing that stability, for the Naira. But is this going to be a different year for the Naira? Do we see some kind of strengthening at some point?
Well, I think, again, the strengthening has already happened. If you look at what happened in the month of December, again, historically, for 5 years straight, we've had currency appreciation in December. And last year was no exception. There was a big move from about 1670 to about 1530 in the official market, driven by a number of factors which will not continue this year. So we'll probably have seen the peak of at least the strongest point of the Naira for now. And you probably have a slight depreciation during the year. But again, given the level of inflation and where interest rates are, it'll be unrealistic to expect the currency to remain constant against the US dollar. Bear in mind, the US dollar has appreciated substantially against almost every global currency. If you look at moves, Canadian dollar, British pound, and the euro, those currencies have lost about 5 to 10% against the US dollar in the past year. So if Naira moves a bit from here, it will not be unusual.
All right. So is there a possibility this might be the year for the Naira?
Possibly. This will probably be the best performing year for Naira in the past 4 years. Now, best performing does not mean appreciating or no depreciation against the US dollar. It just means less depreciation than you've seen in the past. You're not going to see the currency lose half of its value in 1 year. That's not going to happen going forward. You might see a 10% drop in the official market. But I think what's more concerning is the spread between the official and parallel market. That had collapsed in the past, and now it's opened up to about 129, and it's still widening. So it's not clear why that is happening, but that's probably likely to continue happening unless the central bank pushes some money into the BDC sector.
All right, I guess so much for investors to look out for in 2025. Still early days. We'll keep tracking to see how it plays out. Thank you so much. And that's Mr. Egie Akpata, as the chairman, Skymark Partners. Great having you. Happy New Year.
Happy New Year. Thank you.
All right, that's the show today. Markets are open right now. We'll give you a summary of what's playing out on Business Incorporated. That's at 1 p.m. Thank you for watching. I'm Ladi Williams. I hand things over to the Sunrise Daily team.